Hey, what is going on? Welcome back to the channel. Today we're going to be taking a look at Nuls. This was requested in the comment section under one of my videos. So I do want to say that I'm not a financial advisor. Anything you do is on you. You should do your own research before investing money into crypto. And the previous Nuls update is going to be in the top right hand corner of the video. Before we get into the video, I just quickly want to mention my Patreon. So this is a great way to support me and a great way for me to give back to those who support me. We have low cap gem calls, buy and sell alerts, personal technical analysis, reviews, video requests, all that kind of stuff in the Patreon. We have 5 different tiers. We already have around about 35 posts in here. So if you decide to subscribe to my Patreon right now, you're going to get all of them unlocked immediately. All of the 35 posts. I think we have like 12 low cap gem calls. And yeah, so think of this as buying a cup of coffee, but instead of the coffee, you get a lot of useful information in 30 days that will potentially make you quite a lot of money. And that will obviously, be fruitful, right? So your subscription is going to be fruitful. I'm going to make sure your investment in me pays off. So yeah, now on to the video. Now, jumping into the daily chart over here. So you can see that we had this huge pump and we got very overextended. We got all the way to the first fib level over here at $2 and we got sent back down straight away. And we've created this new resistance level over here at the 0.618. So 99 cents is your major resistance level. And this is a level that you want to see broken, right? And a back test of support would be great as well. But you've come back down to the 20 EMA, which I said would be a great level to buy off of. And then we have the 0.5 over here at 79 cents, and you're in between the EMAs, you're consolidating. So once you're in between the EMAs, it's a consolidation period. Once you're below the EMAs, you're in a downtrend, and once you're above the EMAs, that's an uptrend. So we're getting the EMAs to come closer together, which is a healthy thing because these large gaps in between the EMAs aren't healthy. These, these are kind of the precursor before a pullback. So yeah, that's for the daily chart. Now, if we take a look at the RSI over here, I do want to bring your attention to this hidden bullish divergence that we have. So on the RSI, we're making a lower low, but on the price action, we're making a higher low. So this is a hidden bullish divergence. So usually these hidden bullish divergences mean that potentially we're going to get a nice pump relatively soon. And it might not be a sudden pump, right? This might be a nice move, steady move to the upside, and we get to some targets. But, the hidden bullish divergence is there. So that's a great indicator to look at. Also, I would look at the 55 daily EMA, which is the red line, for a buy order, right? So just have some buy orders at the 55 EMA. That's a great support level. Obviously, below that, we have the 0.382 at 63.5 cents. And that's another great support level in case of a flash crash. So if we have a flash crash, you are going to land on the zone, potentially have a long wick to this area, and then come back up straight away. So yeah, keep your eyes on these support levels as well. If we start zooming out and we look at our long-term targets for Nuls, you can see that we have our 1.618 over here at $6.29 and our second fib level here at $12.82. So with the continuation of the bull market in 2022, we can potentially expect these targets to be met, obviously, but it all depends on Bitcoin and what Bitcoin is doing. But yeah, that's it for the daily chart. Let's jump into the 4-hourly. Now, jumping into Binance, this is a bit of a different chart. So we have a different Fibonacci retracement over here. So this one is the swing low from September to the swing high here in at the beginning of December when we started getting that pump. So what you can see happened is we landed back on the 0.5 here. We started losing that as support, and now we're coming back down to this yellow rectangle that I gave you in the last video. And this was a great support zone, and we've actually wicked through this yellow rectangle. And from where we wicked to the next little move to the upside, that was basically a 2x. So if you bought, for example, from the bottom of this yellow rectangle, you basically had a 2x gains and that pump was December 16th, right? So we saw that nice pump, could have taken profits and bought back in. So now we're slowly moving down to this 76 level support, 76 cents. We are in a bearish cross on the 4-hourly chart, so we have a downtrend confirmation. So yeah, it all looks like we're going to be coming back down to 76 cents. Potentially, we can go even lower if we have another flash crash. Like I said, 63 cents over here is your nice support level to look out for. But also, what I do think potentially can happen is if you're coming back down, and you can see that we're holding a level of support at the minute. So this does look like a very nice double bottom over here, right? Looks like a very nice double bottom. If I take a trend line from here to there, right? And now I place that trend line. So we have a little target at 92 cents if we start breaking out of this swing high, right? So we need to start breaking out this swing high, and I use the body of the candles to measure the targets, okay? I don't really count in the wicks. So yeah, 92 cents if you start breaking above this level over here, right? If you start getting above that level, backtest as support, you're looking at 93 cents. So that's if we, continue holding this bottom over here, right? Because if you start losing this low, you're creating another lower low, and that's essentially the continuation of the downtrend. Because we are in a downtrend, have no doubt about that. We're making constant lower lows and lower highs. So yeah, have this yellow rectangle drawn out on your chart so that you can follow it at any time and check it any time. And we do have the 0.236 over here at 58 cents, 59 almost. So maybe that's a great zone to be buying as well. In case of a flash crash, you never know how low you're gonna come back down, right? You can also potentially expect us to hold this white trend line as well. So we haven't really back tested this white trend line as support after we broke out of it. So maybe just maybe we come back all the way down to this trend line, and from there we start moving, and continuing our uptrend. But yeah, that's been it for Nuls. Let's just check out some of the oscillators. So for hourly chart, we're going down into the oversold. So potentially now is a great time to start dollar cost averaging into the Nuls token. So on the 4-hourly chart, you're sitting on the index of 41. No moves to the upside yet. As you can see, once you are down here, below the purple box, you are oversold, and that's a great entry point. And if we take a look at the MACD, we just had the bearish cross over here, the bullish cross, and as you can see, little consolidation period right now. We're in a little consolidation period, and once you get the bullish cross where the yellow line crosses above the red line, that's your confirmation of the uptrend on the MACD. But the MACD is a lagging indicator. That means that you will be late to the party if you trade based on the MACD, which means that you will miss out on some gains, just making you aware of that fact. So yeah, that's pretty much it. If I missed out anything on the charts, please let me know down below in the comment section. Feel free to check me out on Twitter. I do post technical analysis in there. We do have a great Telegram chat with an amazing community, as well as a Discord server and a Patreon. That's it.